Hi there, welcome to the Hedera Wyckoff session. We'll quickly look at where Hedera is heading after a massive price surge last week, and then also we'll look at the daily Wyckoff pattern and see where we are heading to. So quickly, this is the weekly chart, and here we are seeing a red pin over here basically. The bulls and the bears are fighting to keep the price somewhere around the current equilibrium at around 24 cents. Previously we have put this LPSY tag over here, so basically the previous downward trend has been broken. We talked about this triangle, right? So I mentioned a few times, it's pretty soon, within the first 2 weeks of July, a breakout should happen. So that's exactly what happens here. And based on the current stage, there are two possibilities. If this momentum continues, even though you can see the volume is pretty low compared to the buying climax period, or even this LPSY in late February, if there is a chance that people really FOMO in with this current distribution, maybe it can come and retest, and that's something we call an upthrust. It's not likely at the moment when we look at the volume, but we never know, because when it first started over here, well, the volume was higher as well. So yeah, it's not likely, but still a possibility that an upthrust happens and it breaks above the green line at 33 cents. But this is an unlikely scenario. However, like when we look at this here, from the last week and also this week, the price is basically being suppressed under this purple line at around 26 cents 50. So this is the first hurdle the price has to go through. Like, sufficient demand has to come in to break this resistance line before it can test the green. And looking at the daily, previously we have talked about the buying, the buying climax. It happened just a few days back on Sunday. So previously we talked about a sign of strength already happened, and there's a possibility of a minor retracement before the buying climax comes. And the red over here is very quick retracement, and then immediately the buying climax arrived in a few days time. And 2 days ago, well, actually just yesterday, we have an automatic reaction, the retracement from the buying climax, and now it's heading towards a second test. So if I switch to a line chart, it's a little bit clearer. This automatic reaction isn't very deep, but like I said, when I first started these daily Wyckoff analysis, I mentioned it's going to be happening very quickly for these Wyckoff stages in a daily chart. You see, within 3 to 4 days, 3 stages can happen already. So here, if the second test doesn't go beyond this resistance line at 25 cents, the possibility of this really depends on what I said in the beginning, whether an upthrust is going to happen. If demand is going to drive that, then in the daily we'll be able to see an upthrust as well. But like I said, the volume isn't catching up as of this moment. So we had the very tall bar over here that's almost equivalent to what we have seen earlier around the stage during March time. But after like 2 days, it already dies down, and this is the highest so far over the past 4 months since March. And it doesn't last as long. Last time there was like 4 days of this build-up. This time it was longer, but I mean, the high volume period doesn't go as much as last time, and immediately follows this pretty high volume of selling as well. So be cautious, even if you're hoping for something positive to happen. The volume has to really follow. So